In a development that has taken the global financial community by surprise, Chase Bank has reportedly increased its limit on Iraqi dinar transactions to a staggering $250,000. This change, while not yet formally announced in a mainstream press release, is being confirmed by a growing number of account holders and financial insiders. It marks a sharp shift from previous restrictions and could signal a broader reevaluation of foreign currency policies by major U.S. financial institutions. Investors, currency traders, and watchers of the Iraqi dinar, commonly referred to as the IQD, are now scrambling to understand what this sudden move could mean for the future of the dinar and the broader foreign exchange landscape. Until recently, Chase Bank, like many other U.S.-based financial institutions, maintained strict controls over the IQD, largely treating it as an exotic and high-risk currency. Limits on buying, selling, or even holding large sums of the dinar were typically capped at much lower thresholds, often under $10,000, and those thresholds came with high levels of scrutiny. The sudden expansion of this ceiling to $250,000 raises serious questions. Why now? What internal assessments or external pressures triggered this shift? And most importantly, what does Chase Bank know that the general public doesn't? While some insiders suggest this could simply be an administrative update, possibly reflecting internal compliance revisions or operational restructuring, others believe it could be a prelude to something far more significant. It's impossible to ignore that the move comes amid ongoing rumors and speculation surrounding a potential revaluation, or RV, of the Iraqi dinar. Although the Central Bank of Iraq has not confirmed any immediate plans for such a revaluation, the global interest in Iraq's economic development, bolstered by oil revenues and infrastructure projects, has been growing steadily. Market analysts are divided on the implications of this policy change. On one hand, skeptics argue that raising the limit may not indicate any deeper strategy. It could be an isolated decision related to customer demand, institutional liquidity, or even internal technical flexibility in managing foreign holdings. On the other hand, optimists view this as a deliberate and calculated step. They believe that such a substantial increase would not occur without Chase conducting deep risk assessments, compliance reviews, and policy adjustments with full knowledge of the potential ramifications. For a major institution to greenlight IQD holdings up to $250,000 per client suggests a level of confidence not seen in over a decade. The financial world has long kept a wary eye on the IQD. Since the fall of Saddam Hussein's regime and the subsequent economic rebuilding of Iraq, the value of the dinar has remained relatively low, heavily managed by the Iraqi central bank. While some investors have held on to the hope that the currency would one day return to its pre-2003 levels, or even appreciate significantly as Iraq regains economic stability, most institutional players remained cautious. Until now, even modest IQD holdings were flagged and monitored carefully due to concerns over volatility, lack of liquidity, and geopolitical uncertainty. The change in Chase Bank's policy could now open the floodgates for other institutions to follow suit. Adding to the intrigue, sources close to financial compliance departments suggest that Chase has already begun issuing internal notices to certain departments regarding the revised limit. These notices, while not yet available to the general public, appear to confirm the new $250,000 cap and outline updated procedures for IQD account activity, including verification of source of funds, documentation for large transactions, and new protocols for foreign currency deposits and withdrawals. This kind of preparation hints at a high-level strategy that may already be in motion, one that could be tied to larger monetary or geopolitical developments on the horizon. For currency speculators who have long believed in the dinar's potential, this move is being interpreted as a green light, an institutional acknowledgement that IQD is no longer being treated as a fringe asset. Chase's reputation as a conservative and risk-averse institution only adds weight to this interpretation. If the bank is willing to allow individuals or businesses to hold up to $250,000 in IQD, it's likely based on thorough internal evaluations, perhaps even in consultation with regulators, treasury departments, or foreign policy advisors. Of course, it's important to underscore that there is still no official confirmation that a revaluation or rate adjustment is imminent. As of now, the exchange rate remains unchanged, and the Central Bank of Iraq has issued no new directives. Any suggestion that Chase's move is a precursor to a revaluation remains speculative. However, the timing is suspiciously aligned with increased global attention on Iraq's economic reforms and investment initiatives. Baghdad has recently entered new oil contracts, infrastructure agreements, and international investment partnerships that could drastically reshape its financial standing. Whether these steps are enough to alter the dinar's trajectory remains uncertain, but the growing alignment of institutional policies may point to changing winds. It's also worth considering the potential international implications. If other major banks like Bank of America, Wells Fargo, or even European institutions were to follow Chase's lead, it could signify the beginning of a new phase for the dinar, one where it gradually re-enters mainstream currency markets with greater liquidity and legitimacy. This wouldn't just affect individual investors or currency collectors. It would have serious implications for global currency reserves, institutional portfolios, and even central bank holdings. The IQD's long exile from mainstream financial systems could be nearing an end, and this could have ripple effects far beyond the Middle East. Some observers have noted that the Chase Bank update coincides with broader changes in U.S. Treasury reporting guidelines regarding foreign currency exposure and capital movement controls. While there's no direct evidence linking these two developments, the timing is enough to raise eyebrows. Could there be an undisclosed intergovernmental coordination effort at play here? Or perhaps a silent acknowledgement that Iraq's economic future looks more stable than previously assumed? These are the kinds of questions that institutional analysts are now racing to answer, even as the average retail investor scrambles to keep up with the breaking news. For the everyday account holder, this policy change might seem abstract or even irrelevant. But those familiar with the foreign currency markets understand that changes in bank policies, especially at institutions as large as Chase, rarely happen in a vacuum. They are the result of layered, complex processes involving legal review, compliance risk analysis, and often insider knowledge of upcoming regulatory shifts. The fact that this specific change is centered on the Iraqi dinar of all currencies is what makes this news so extraordinary. It's not about the limit itself, it's about what the limit suggests. Still, it's vital to caution against getting swept up in the excitement. Investors should proceed carefully and with full awareness of the risks involved in foreign currency speculation. The dinar remains a highly illiquid and speculative asset, and while this change from Chase Bank may indicate growing institutional interest, it does not guarantee profits, revaluation, or rapid appreciation. Historical patterns in currency revaluations, especially in post-conflict nations, show that such processes are often drawn out, unpredictable, and highly sensitive to political shifts. In the coming days and weeks, more details will likely emerge. Whether from formal press releases, regulatory filings, or insider leaks, the full scope of Chase Bank's policy adjustment will become clearer. Already, customer service representatives at multiple Chase branches have reportedly confirmed the new threshold when asked directly, though these confirmations have not yet been standardized across the system. That inconsistency in itself suggests that the policy may be in the early stages of rollout, with full implementation still underway. The financial community will be watching closely to see whether this is a singular event or the beginning of a broader trend. Currency traders, especially those active in the dinar space, will be adjusting their positions accordingly, as will private investment groups and foreign exchange platforms. If history has taught us anything, it's that major monetary shifts often begin quietly, through policy tweaks, internal memos, and small-scale institutional moves that ripple outward until they become global events. Chase Bank's adjustment to the IQD limit may be one of those quiet beginnings. In the end, the true significance of this development will be measured not by today's headlines, but by what comes next. Whether this is the start of a revaluation run-up, or merely a precautionary adjustment in response to shifting market dynamics, remains to be seen. What's certain is that the financial world is now paying attention, and for the first time in years, the Iraqi dinar is back at the center of the conversation. For investors, institutions, and observers alike, the message is clear. Something is changing, and it's time to take notice.